Hello everyone, welcome back to Chill Deal Trades, where I analyze the market so that you know what's going on. Today we are going to be doing another video on Alibaba because a lot of crazy things happened today with the Chinese stocks, and we're going to both overview the news that came out as well as a technical chart to see how the stock is looking. If you're here, please hit the sub button if you haven't already and join the squad. We're growing and every sub makes the videos better. So let's first jump into some of the news that came out today. So the biggest news was the crackdown on DD. Basically, China was like more about their data side of things and wanting more control over the data. And so one thing you have to realize about Chinese stocks is there's always an inherent risk because of the government structure. So obviously the Chinese government and country is structured much different than the US, where it's just a different system. I don't want to use any specific terms, but a different system. And so that means the Chinese government wants more control over things, and they sometimes want to know more of the ins and outs or be a part of that ownership. And so that's just one of the inherent risks that you have to think about whenever you're investing with a Chinese stock. And we saw some of that news today, where it's like any of these Chinese companies used in the U.S. markets, like, we want to make sure that there's not data getting out about these companies that we don't want other countries to have. And so as you can see today, a bunch of basically all the big Chinese name stocks were down pretty significantly, anywhere from 5 to 20%, 20% for DD on the upside. And so as we can just see, it's like Chinese governments blocked the company's app from being downloaded. There's a lot of, to sum up what happened is, the CCP kind of told DD, like, we don't want you to list on the U.S. market. They did it anyway, and so CCP took like, hey, you're not going to listen to us, so you know what we're going to do? We're going to shut down your business. And so with shutting down their business, that Chinese government also was like, hey, this is something we've been talking about for a while, is more regulation, both on the tech side and also the financial side. And so some of the pressures that have already been on Alibaba just bubbled up even more, and that's why we saw a dip in the stock. This is just a thing from, we believe that cybersecurity reviews are likely because of Chinese concerns around leaking sensitive data to foreign nations in the U.S. Passed legislation that will require Chinese companies listed on the U.S. exchange to allow the U.S. public company oversight board. And so what you have to realize is when a Chinese company goes onto the U.S. market, there are regulations, but there's not the same regulations as a U.S. company. And so there's some nuances in the data they have to report compared to a U.S. company. And so something that a lot of people don't know about is the U.S. has actually been, the SEC has been investigating Alibaba's financial statements for the last 5 years. This is something that's always have been ongoing, and I think now that we're seeing more and more Chinese companies list, especially in this IPO frenzy, I think the knowledge around that is growing, and people are really realizing that it could have a larger impact on stocks holistically. So that's one reason why we saw Alibaba come down today. The second thing, this came out a while ago, but I think this is just adding fuel to the fire, is to put it really simply, Jack Ma and Joe basically put their like shares of Alibaba as collateral to get a loan. And so people were like, what's going on here? This is something that a lot of CEOs do, but I think because of all the angst and fear around Chinese stocks and Chinese companies, and I would say the Chinese government, these things are just getting blown out of proportion. But they're still important because I think there's two things we have to realize about the Chinese government. One is the data side of things and also the financial side of things. This is just my personal opinion, but I think that the Chinese government needs to get their financial system situated in a way to make it a safer haven for international investing. As you know, like, the Chinese government has significantly become a large international player over the last 10-ish years. And they're wanting to encroach more on the growth of the U.S. and pull more money into Asia. And so part of that is legitimizing how the financial system is run in their country, which they don't have as solid of a structure, I would say, as the U.S. does. And so kind of the fears around, tech and regulation and data, as well as the financial side of things, these two things culminating are really causing this like giant ball of fear. And one thing I've learned in my experience is whenever it comes to fear, in terms of a stock is experiencing, that's a really dangerous time to be holding that stock, because fear can last years. There's things that go really quick. A company reports maybe missed earnings, but next earnings they could do better. But fear is something that can persist a long time. I've mentioned this in my past Alibaba video that you can look. I did more of a fundamental analysis. But one thing that I've always been keeping an eye on is institutional buying of Alibaba. And basically since COVID, for the most part, we've seen more buying than selling. And this is, for me, like one of the many reasons we've seen the stock continue to come down is when there's a lot of fear, people don't want to make investment in that company. And so I've been watching Alibaba. I think it's cheap. I think, it's maybe hated a little too much than it should be. But you need to constantly look at institutional ownership, because I think once we see a shift that buying takes over selling, this is kind of the time that I'm going to want to start buying into the company. But that's a lot of time on just the soft facts. Let's go ahead and jump into the technicals. So I mentioned this is my last video, but we did see a crazy bump up, and I told you in my video, if you listened, that this was not going to break out further. And there's a couple reasons. The first is Alibaba never makes a run at this high of an angle. It's just unsustainable for this stock. And then when I zoomed in, I also saw that it was hitting the 100-day, and so we failed to break out above the 100-day. So those were two things that were really important for me of why I didn't buy on that push higher. We also had a bunch of gaps on the move higher, and I knew that the stock was going to have to push back lower. It would have did it eventually, but this bad news just accelerated that process. And then the third thing is, look at when we go back in time, we have so much resistance in this area, and the stocks that have not had momentum in the market, positive momentum, have failed to break above their really important breakout points on the chart. If the stock would have went like this and started moving higher, that would have been a significant breakout point, and we probably would have started an uptrend there. Obviously, the bad news probably would have pushed it back down, but that was a very significant breakout point, and we weren't able to break above that. We have broke back below the downtrend line from before, so that's something to keep an eye on as we're back below that. And now we've also created a new downward trend line, so we have even more downward momentum getting in the stock. We're under all the SMAs, and the SMAs are stacked like 200-day, 100-day, 50-day, which is typically a long-term bearish indicator. Whenever you see the 50-day cross above, the 200-day cross above to the top of the other moving averages, that typically tells you you're in a bearish phase for a stock. And on these couple days, we've also moved below the 50-day. So now we're below the 200-day, 100-day, and 50-day, which is not a great sign. Even without the bad news, moving forward, if this pattern stays, and that's not a great sign for the stock in the short term. We're obviously coming up in a really big support area. As you see, there's been so much accumulation here, and when we go back in time, you see the same thing here. There's just so many points of back and forth. So holding this range is going to be really important for the stock. If it holds here, I would say even a little bit lower, around 206. If it holds this 209 to 206 area like this, then I might start considering if it goes sideways for a while, as that could be an accumulation point, and I could kind of watch institutions and if they're buying into that accumulation. But there's not a lot of positive going on the technical side of things. So we have fear on the non-technical side, and the technical charts aren't looking healthy either in terms of bullish momentum. And so there's just a lot of negatives right now. RSI also broke back below 50, which is an important part. Whenever we see RSI below 50, we're typically in a bearish phase. And so we're going to have to see if it can break back above 50 and start going like this, because that's when we'll probably see some accumulation. And if it can break up higher and stay like this, then this bearish trend has probably changed for the stock. But like I said, there's a lot of negatives, and so if you are invested in this company for the long term, and maybe you're at a higher price, these are areas I would say 200 to 180 is the range where you're going to probably want to accumulate if we break lower. And if you're considering buying at this price, these are the factors you want to keep an eye on. we do somewhat have this line from this low on this big candle, which is going like this. So this is something we want to keep an eye on to see if the price starts breaking lower into this range, and that's about the 200 range, and see what happens at that price point. We have some steeper triangles that go down to like 150. I think really bad news is going to have to take it that low, and that's probably more unrealistic for the stock. But as I mentioned before, fear is a really strong indicator, and until that fear settles out more, then we're potentially going to see more sideways action or downward action for the stock, as well as the technicals aren't looking so hot. So I'm really curious what you think. Do you think Alibaba's pain is not warranted, or do you think that the US is going to take Chinese stocks off the market, or this regulation is going to push down the valuations of these stocks even more? And let me know if I missed anything. Is there any news that I missed that you have insight on? I would love to know that. But thanks for stopping by and watching the video. If you're here again, you guys are the MVPs, and if you're new, please sub and join the squad. That would be really appreciated. But I make a video every day, so I'll see you again tomorrow.